What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Saturday, October 2nd. First and foremost, thank you to each and every one of you that tune in to watch my videos and to my channel. I appreciate all the likes, comments, subscriptions, shares, any way possible that you help get out the message to as many people as possible. I truly do appreciate it. Again, for those of you that don't know, the reason the channel is called the Stock Hustle is because I believe in the stock market, you are either going to get hustled and get your money taken, or you are going to hustle and make significant amount of money for you and for your family, or for whatever financial goals you have in your life. But again, as always, guys, today's play is going to be a little different. If you saw the previous video on Merck, it gave you kind of a brief description as to what made me pull the trigger when I bought into a Merck option play that triggered middle of the week last week. Ended up turning into a $700 gain. This is going to be another potential play it is a play that I'm participating in, but that does have some significant potential, and I'm going to explain why in the video. So, first and foremost, as you guys see from the chart here, my Thinkorswim, this is SPY, or the S&P 500. I want to point out a couple things, and it'll better help you understand why I'm leaning this way in the video. This is a 10-year gap, essentially, for the SPY. As you guys see from this red line here, we could even extend it all the way to the beginning of the year, to be honest, but this is a 10-year gap or 10-year trend line in the red line that I've drawn out for the S&P 500. What is the definition of a trend line? Touch points. As I've pointed out to you guys in previous videos, respecting touch points gives you an indication of a trend, right? As you guys see, touch, bounce back, touch, bounce back, touch, bounce back. This big dip, as I've mentioned in other previous videos, is essentially the COVID dip, which you can zoom in just to this. Now, please note, this chart is broken down by weekly. So each candle on the chart represents one specific week for the SPY. This was COVID. As you remember, the March 17th through the 23rd, essentially around that time, is when we did have that major dip in the SPY. If you guys are following along with the red trend line, as you do see, we even respected it after the COVID dip, coming back, touching up until this point here, which was November of last year, is when we officially broke this trend. Specifically with this candle on November 23rd, and since then we started a new trend. Well, if you go back through historical weeks, you can identify with this teal line trends that we have followed since essentially April 6th of 2020. As you see, we continue this trend line all the way up to here. Now, when you look at the SPY, right, the SPY is a massive ETF, right, consisted of the top 500 companies in the country, right? So as those companies grow, so does the SPY. As you guys have seen, it's clearly visible. Microsoft, Apple, Tesla, all those companies have been skyrocketing. When you look at this breakdown, look at this parabolic move to the top side, right? Now, what do we always say about parabolic moves to the upside? If something shoots up straight up to the sky, it's going to come straight down eventually, right? Well, with the SPY, it's been a little different. As you guys see, it's consistently maintained this trend. And we recently, in the last 2 weeks, actually just broke out of this trend, which you see back here with these two candles. So, why am I talking about the SPY? As I always show in my videos, ever since Unusual Whales came out and I've found out about it and started using it and gotten familiar with it, I don't play anything not on Unusual Whales because I don't trust it otherwise, right? I believe and trust the data that Unusual Whales gives you because, again, for me, as I've stated in other videos, it has changed the way I invest because of the amount of information it provides me. So, as you guys saw with the previous video for the Merck option, SPY also had a trigger, and I'm about to show you guys. This is the landing page for Unusual Whales. If you've never gone here, when you get here, once you're a member, where this alert section is, you can click on alerts, and it will take you to the most recent alerts they have sent out, right? It'll tell you on this last thing if it was a premium, meaning you're a premium member, so you got that alert, or whether it's free, right? So specifically, there was something that caught my attention yesterday afternoon, right? Number one, here, $340 put for SPY, okay? SPY is trading at $434. $340 put is a significant disparity there, right? First and foremost, look at the volume, as I showed in the previous video, 6,700 versus 169. So this spike is coming from somewhere. Well, if you guys ever click on this, you can actually open a new tab, which is this here. I already did that, so I wouldn't lose my place, which is this tab here, as you see. SPY, November 5th, 2021, SPY, put $340. If you go down, It gives you some information like you saw in the previous video: delta, theta, vega, gamma, rho, right? Open interest, volume. That's not really what I want to show in this video. Number one, look at the price of this. This price is essentially $36 to $37. So just kind of give you an idea. The spread is really close together, right? If you go down a little further, under these alerts, you can see 10 big option trades recently. What do you notice? Bearish, all puts. That's something you might want to pay attention to when you are buying options. Who's buying what and for how much? So as you see these amounts, it's pretty significant amounts of money being played into this. Historic volume and open interest over the last 10 days. Well, take a look. Minimal, boom. 6,774 volume on October 1st. So that's a pretty good sign if you're looking to play or participate in an option of this sort. When you see a volume increase or spike out of nowhere, that's important to take note of. 10 big dark pool trades. As you guys see, buys 107, significant buys, right? Some of you may not know what a dark pool is. I can give you a quick introduction to it. Essentially, dark pools are private exchanges for trading securities that are not accessible by the investing public, meaning retail investors like me, you, or everybody else that watches these videos. Dark pools were created in order to facilitate block trading by institutional investors who did not wish to impact the markets with their large orders and obtain adverse prices for their trades. Meaning, as you're going through, if you want to spend $100 million, every time you make a buy, it's going to keep increasing and increasing the price. Doing it this way, you get to pick one sole price to buy in at and make a big block buy, right? Millions of shares. Essentially, as you guys did see from this alert, these are some pretty big trades. 107 million, 107, right? It's a lot of money to be putting into the market. According to the most recent SEC data, which is just a joke to be honest, but that's another topic for another video, there were 59 registered alternative trading systems, aka dark pools, with the SEC as of May 2021. So these dark pools are frequently used by big market makers to essentially hide or conceal big block trades from the market. So that's a quick explanation into dark pools. You have another section down here, which I love to see. It's recent Senate transactions on SPY. So anyone in government or working in government, congressman, representative, you get to see the things they've been buying and selling. So as you see, again, that's not the point of this video. I just wanted to highlight it because I think it's hilarious. I love unusual wells for the data they give you. But down here where it says chain detail, this is something I did pay attention to. When you default and look at it first, it starts here at the trade. But if you select at the second tab where it says stock, you get a technical analysis rating breakdown for SPY, right? As you see, what do we see? It's rated to sell. 12 sells, 4 buys, according to this, right? Let's go back to the alerts. What caught my attention? That was the first thing that caught my attention, which has sparked me looking at this chart, which I mean, as you guys can see, I always quote the SPY or look at it because it's important to see what the bigger, broader market is doing when you're participating in a play, whether it's under SPY or not. But if you keep going a little further, there was an alert, and this wasn't actually a premium alert, it was a free alert, which is this right here. Spxu, $16 call. Now you may be saying, well, what do you mean a call and it's bearish? That doesn't make sense. I'll explain in a minute. Spxu is essentially an inverse ETF of the SPY. What does that mean? It means this. The ProShare Ultra Short S&P 500 Spxu is one of the most aggressive leveraged inverse ETFs available to investors. Spxu seeks to replicate the moves of the S&P 500 but in the opposite direction and multiplied by 3. This is the most important piece I'm going to point out of this video. Spxu is not suitable for long-term investing and is meant to be held for 1 day or less. Meaning, the only reason you would buy into this is if you anticipate or expect a major move to the downside in the S&P 500, right? Because again, it's leveraged, which means anything the S&P 500 does, this is going to get multiplied by 3. So the move will be 3 times greater under Spxu. Please, please, please remember this statement. So let's go into this alert. What do we see? First and foremost, open interest 1,066, volume 5363. That's a significant increase in volume. Delta, very nice delta, 0.81. So you would earn $81 for every single dollar the S&P 500 goes down. Because remember, it does the opposite. So for Spxu to go up, SPY has to go down, and it's leveraged by 3. So therefore, that's why you're making such a greater delta. You have the theta, the vega, the gamma, or the rho. Look at the theta, very minimal, nothing major. If you go down a little further, 10 big option trades recently. Well, let's take a look at these trades. Sells essentially would be if you sell a call, you're anticipating SPY to go up. If you buy a call, you are anticipating SPY to go down. So you have this one for $2,000 at 6:48 in the morning. Nothing major, nothing stands out crazily for the SPY or Spxu. But then look at the last trade at 11:48. $530,000 essentially for the October 8th expiration buying of a call, which again means you feel the SPY will go down, so this will shoot up. This buy was made at 11:48. Look at the alert, 12:23, so minutes after, right? Nothing, maybe less than 30 minutes after. If we go down to historic open interest, volume and open interest, nothing major, nothing major. I mean, this probably was the biggest one, 1,063. This 14 and 13, I mean, I get it, but 10,532 stands out dramatically. Again, going to the dark pool trades, you only see one sell for 1.5 million. You see all these other buys, the biggest being the last one, $2.4 million, essentially going into this buy for Spxu. So someone, again, you don't always know the catalyst or the events coming. We're just seeing the money. You're just looking at seeing what the whales are doing because you want to follow big money. So with that being said, this stands out dramatically. If you go down further again into the stocks tab, you see here the technical analysis for Spxu. What do you see? 12 buys, 4 sells. The direct opposite of what SPY had rated. If we're going to look at the historical, you see this enormous bar for the dark pool trade. And again, all these bearish, essentially call options being purchased on Spxu, signifying someone feels it's going to go up, right? So that was going through the alerts, what caught my attention, what I noticed right away when I went through this breakdown. So then I went back to the SPY. So this is the SPY chart, as I've already stated, right? This is broken down by weeks again, so please don't get that confused. Each candle represents a week. You see this teal trend line? It has been respected through every dip, correction, adjustment. We've touched it, bounced back, touched it, bounced back, up until, like I said, these last 2 weeks. Now you see that this trend is broken, which means we are no longer respecting this trend line. Once you've no longer respected a trend line, it's harder to kind of get an idea of what's coming down the pipe because you don't really know that. So then I started looking at other things. When I look down here at the RSI, as you guys do see, I always frequently reference my indicators. The MACD, first of all, has converged into a selling period with this red arrow pointing here. Anytime it converges, it puts an arrow on the MACD. Secondly, we are essentially under or right at neutral on the weekly chart for RSI. I put another white line to signify neutral. I can show you guys here. Let me switch this. As you see, 50 is neutral. So that white line that you see in the RSI is neutral. We are essentially sitting right at neutral. Well, what does the SPY tend to do when we get towards that neutral line, which I'm going to show you guys right now, and this is what kind of sealed my deal for conviction. When you switch it to the day, and we zoom in, anytime the SPY touches or gets close to that neutral line, it has a tendency to dip below it, 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 dip below it. If it dips too far below it, it has a tendency to hit neutral on the upside and then bounce back down. Dip below it, way below it, came up, dipped back down. Now, the last time it had anything extremely major was here when COVID hit. You see this massive cross to the downside, actually went below the oversold, came back, didn't touch it, and then fell for a period of time. So stop right here and ask yourself, what's been going on in the market? You have the debt ceiling barely being passed, only extended to December. You have a news article saying that the U.S. credit rating might be lowered. You have this Evergrande thing out of China releasing information week by week. You have signs pointing to a big market correction. We have the chip shortage. You have a lot of things affecting the market in a negative sense, right? That plus this in the chart, plus this in the indicators is what officially gave me the conviction to play this on top of the fact when you look at the dark pool trade in the millions being initiated, plus knowing full well what we just discovered about these leveraged ETFs, as it does state in Investopedia, you do not, it is not suitable for long-term trading and is only meant to be held for 1 day or less. Did make me a buyer specifically for the alert that they sent out on unusual wells, as you do see here. Spxu $16 call for October 8th. I essentially was going for, I think it was 90 to 100 on the spread. I put it in at 97, got accepted. So I am going to be a player on this. So for, again, as I mentioned in my previous video, anytime you initiate or buy into an option or stock, you have to have an entry and an exit plan. You've just seen my entry plan. Now I'm going to tell you my exit plan. Specifically, what I'm looking for out of this SPY. Because we are below this gap up zone, right? This demand zone, we are below that. You see this wick on the top of this candle? It's telling you it's being pushed to the downside. Having all the puts being placed on the SPY, having all the calls being placed on SPXU, I have a feeling come Monday, we're going to see another red candle to the downside. And after that point, I'm not probably going to hold. It would have to be some dramatic information in the chart for me to continue to hold that throughout the week. More than likely, what I'm looking for is a spike to the downside, collecting $81 for every single dollar that the SPY does fall, and then cashing out. Because again, you can't be greedy, and with options you have to be very careful, especially with leveraged ETFs. Those are in multiples of 3, so the move is magnified by 3. So if, let's say, I hold it, I'm right, we get another dip on Monday to SPY, and then Tuesday this green ginormous candle tends to push it to the upside, something like this, I'm going to lose 3 times the amount I've already earned, which again, very short term, very high risk, high reward kind of play. But looking at the chart and looking at the indicators, I have a feeling that this RSI being below neutral is going to have another push to the downside. If you're looking at the ATR, as you see, there is a swing of essentially $5. So $5 times $80, I'm looking at a gain of around, what is that, $400, if I'm correct, potentially. According to the ATR. Now remember, the dips can be bigger than the ATR. It doesn't just have to be at 5. It could be bigger, right? So that's what I'm anticipating in this play. I just wanted to share with you guys so you get a better understanding of what I'm looking at. Again, if you guys have questions or comments, leave them down below. Don't forget, you can always hit me up on Twitter or IG. And until the next one, guys, I'll catch you then.